healthcare coverage that we were talking about. So like we mentioned, everyone has to have the minimum health coverage for the whole year. I know there are certain exemptions. You can look at the book for that. I know one of them being like if you're a non-resident alien, or if you're just like not a citizen, it doesn't apply to you. And if there's like a 3-month gap only, then the penalty doesn't apply to you either, if it's only for a short year. So definitely those are the two ones that I would run into if there were any exemptions or exceptions for the healthcare coverage. So every month they have to be covered, minimum essential coverage, or if they don't, then they have to pay the shared responsibility payment when filing the federal income tax return. So I think that was a line item on page 2. So if they didn't have health coverage for a month, there should be payments added, like in the tax section, as an additional payment. Let's see. So most of the time they would be covered either through their parents, or if they have on their own through their W-2, or if they're just going to purchase one from the marketplace. So again, those forms should be the 1095A, B, or C, and it would show you for each of the months that they were filled out, that they had coverage throughout the year. Let's see. So the government knows that if you are under a certain income level, it would be hard for you to purchase health coverage, right? So what the government does is they would provide you with this premium tax credit, and this is based on the poverty lines in 2015. So it's a sliding scale. The more money you make, the less the tax credit would be, because you would be able to afford it a bit more. If you're way under the income threshold, if you just don't have a lot, the government is going to increase your ability to get the premium tax credit. So there's stuff like that. Let's see. I guess this one hasn't been updated, but just to give you an idea, for 2013, these are the thresholds. So for one person, $11,000 for the whole year is not a lot, right? And then up to 400% of that, if they're leaning towards $47,000 for the year, their premium tax credit would be lower than if you were somewhat at the 100% level. So just keep that in mind, and there should be updated ones in your book, so the 4012. So if they receive the 1095A, you're most likely going to fill out the form 8962, the premium tax credit, if they receive advance payments of the credit throughout the year. So that's why it's very important that they have this 1095A, because you would be inputting the items from that form to TaxSlayer. Let's see. Because there are two choices. The government says, hey, if you want, you can just take the tax credit at the end of the year and use it to reduce your tax liability then as a payment. Or you can get it throughout the year, and that could be shown up only on your 1095A. Like, there's advanced payments of the credit for them to pay your insurance company, and so that's how you would be able to afford your health insurance, right? By the government saying, hey, you can take advantage of this tax credit not at the end of the year, but during the year, by paying monthly to your insurance company for being able to get health insurance. So just some changes that occurred. if they, like I said, they received an advance payment or if they had excess payments throughout the year, then you had to fill out this form. So, let's see, how's the best way to do this? At the end of the year, if the government gives you $5,000 of this advance payment throughout the year, $5,000, right, for your tax credit. But at the end of the year, you're only allowed to take $3,000. Let's just say, let's see, I like writing things here. Okay, so say throughout the year it totals up to $5,000 of the advanced tax credit that you received throughout the year. But say at the end, because like we mentioned before, the tax credit, the advanced tax credits that you received are based on your income. So maybe at the end of the year you made more money than what you initially thought would be throughout the year. It's just based on estimates, right? Like you made 40,000 and then you started receiving this, or let's just say, I'm just shooting up. But let's just say at the end of the year you made like $60,000. So since you made more money than when you initially thought, your allowed credit then would be reduced. So you're only allowed 3,000 out of the 5,000 you made throughout the whole year. So the Form 8962 is going to reconcile the differences, like at the end of the year versus what you've been receiving throughout the year. So that $2,000 difference that the government says, like, hey, you kind of owe us now because yes, we made payments throughout the year 5,000, but you can only take 3,000. That 2,000 has to come back to us. And depending on your client's situation, if they had a refund, the difference would reduce your refund, or if they had an amount due, it would increase their amount due. So just keep that in mind. I know it kind of sucks when you have a client and you're like, I'm hoping for a refund today, and they're like walking out with an amount due. It's not your fault. Like the circumstances are, it is what it is. Like if they've had stuff like that, like don't feel bad. Don't feel like every visit you have to make has to be a refund. But yeah, so that would happen in this scenario here. But let's kind of change it up. So let's say you keep the 5,000, and let's say you made less money than when you initially did all this stuff. You had 40,000 when you first started out, but you actually just made 30,000. So in the end, you're actually able to take $8,000 instead of for that tax credit, the premium tax credit. And the government says, oh, well, you have a $3,000 difference. And what's the good thing about this premium tax credit is that it's refundable. So it can increase your refund, or if you had an amount due, it would reduce your amount due. So I like to think in terms of up and down, big or small. I don't like the nitty-gritty of some of these things, but just know that this tax credit is able to increase your refund or decrease your refund, increase your amount due, or decrease your amount due depending on your situation, whether at the end you made more money or less money throughout the year. Did you guys have any questions on that? I think once once you read through the forms, it makes a lot more sense. To be honest, like some of these forms, like I haven't seen too extensively, but you learn a lot through reading like some of these forms. And just keep, like I said, keep your books on the side when you're preparing these returns because you'll refer to them pretty often. If like they had exemptions, I think there's going to be a question on TaxSlayer if they do qualify for an exemption for not having, health coverage for certain months of the year, if they change jobs, 3-month shortage, or if they're not like a citizen or anything like that. There is a code for that. I believe on TaxSlayer you have to input like a certain letter code or something. I'm not sure. I think there's a code, right, Kyla? Yeah. So you would just input it there. But make sure you thoroughly interview the client and see if that exemption really applies. Don't just feel like, well, I think I have the exemption. No, you kind of want to go through the exemption list before you actually give it to them. Some of these things are calculations, but those should be easily calculated when you go on TaxSlayer. So just to preview again, these are the forms that you should be familiar with or that are all related. The 1095A, B, or C, whichever it comes from, for their health insurance coverage throughout the year, it will be stated on that. The 8962, if they are able to claim advanced tax payments from those health insurance throughout the year, then they would be reported on that. And if they had coverage exemptions, it would be on the 8965. And it's really small. Let's see if I can go back to 1040, right? So just to kind of tie it all together where it shows up on the 1040. Okay. So 46, like we said, if we had excess premium tax credits, like the government said, hey, you're not allowed to take more than what you really paid, so you have to pay that back on line 46. So it would be in addition to your tax, you pay that back. Then if you actually receive a refund, it would be under your payment section. So like I said, if there's $5,000 you paid throughout the year and $8,000 you're actually able to take, then that $3,000 will show up as line 69, the net premium tax credit, as an addition to your payments. So you should be able to get that as a refund. So just kind of be aware which lines to kind of see things, which ones increase your taxes, which ones, increase your refunds, decrease your payments. Just be pretty comfortable about which form relates to what line on the 1040. I think that's pretty much it about those credits. Did you guys have any questions? We're going to send these PowerPoints out, so if you guys need to read back on it, read back on it. Did you guys have any questions? Alright, well thank you for bearing with me until like 1 p.m. today, this fine Saturday morning, afternoon. I really, really, really appreciate it, despite all the technical difficulties. So thank you guys again. I'm up here if you need my contact info about taxes, VITA, whatever in general, feel free to ask.